Ladies and gentlemen, good day and welcome to the JK Lakshmi Cement Q1 FY23 earnings conference call hosted by PhillipCapital India Private Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference, please signal an operator by pressing star then 0 on your touchtone telephone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vaibhav Agarwal from PhillipCapital India Private Limited. Thank you and over to you, sir.
Yeah, thank you, Melissa. Good evening, everyone. On behalf of PhillipCapital India Private Limited, we welcome you to the Q1 FY23 call of JK Lakshmi Cement. I need to highlight that JK Lakshmi Cement is also the holding company of Udaipur Cement Works Limited, and therefore the call is also open about discussion about the performance of Udaipur Cement Works Limited. On the call, we have with us Dr. Shailendra Choksi, Whole-Time Director, Mr. Arun Kumar Shukla, President, and Mr. Sudhir Bidkar, CFO of JK Lakshmi Cement. I would like to mention on behalf of JK Lakshmi Cement and its management that certain statements that may be made or discussed on this conference call may be forward-looking statements related to future developments and current performance. These statements are subject to a number of risks, uncertainties, and other important factors which may cause the actual developments and results to differ materially from the statements made. JK Lakshmi Cement Limited and the management of the company assumes no obligation to update or alter these forward-looking statements, whether as a result of new information or future events or otherwise. I will now hand over the floor to the management team of JK Lakshmi Cement for their opening remarks, which will be followed by interactive Q&A. Thank you and over to you, sir.
Thank you, Mr. Vaibhav, and good afternoon, ladies and gentlemen, on this Q1 phone call for JK Lakshmi Cement. We have with us Dr. Choksi, Whole-Time Director, who has been with us on all the calls in the past. And it's my pleasure to introduce Mr. Arun Kumar Shukla, our President, who has joined us in February 2021 and now is being formally inducted on the board with effect from 1st August 2022. That is from Monday. And Dr. Choksi, the Whole-Time Director, along with Mr. Wali, would be laying down their office on the conclusion of their term as the Whole-Time Director on 31st of July 2022. Mr. Shukla would be looking after the entire operations, be it of manufacturing operations or in the marketing, etc. So he will be the whole CEO of the company and will be taking forward the journey of JK Lakshmi from where Dr. Choksi and Mr. Wali had left it on 31st of July 2022. Now, results you would have seen already. One important change which we have done in this quarter, which I'd like to highlight in the beginning so that clarity comes for all the analysts, is so far earlier what we were doing whenever Udaipur Cement Works wanted to source cement, they used to supply clinker and they were booking the clinker as their sale, and the cement which got converted from that clinker was being shown as cement purchased for UCW and cement sale for JK Lakshmi for the clinker supplied by them. So it resulted in unnecessary duplication. So from this quarter, that is from financial year 23, what we have started doing, whatever clinker they supplied, that will be on conversion basis and they will only pay the conversion charges. No sale of clinker will be shown in Udaipur, nor any sale of the corresponding cement will be shown in JK Lakshmi. So that's why there were so many questions from the analysts yesterday why there is no sale on the clinker. And that is the change which we have made. So there will not be any duplication. Only the cement which has been purchased either by Udaipur or by JK Lakshmi from Udaipur or by Udaipur from JK Lakshmi, against which no clinker has been given, then that only will be shown as actual sales because that is real. But on a consolidated basis, that will also get wiped off. So figures we have already shared with most of the analysts. Now, with those remarks, I throw the floor open for question answers.
Mr. Bidkar, before you open it for question answer, let me first and foremost thank every participant, and let me also thank them for all the cooperation that we have received and I have received in particular. I would also like to take this opportunity to welcome Mr. Arun Shukla, who has been with us now for last year and a half, and I can assure the entire investor community that the company is in very safe and in very good hands. And I'm very sure that all your queries that you may have today will also be answered very appropriately by Mr. Arun Shukla, who's already hands-on on the job for now last more than a year. Thank you very much, and thank you, Philips Capital.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may enter star and 1 on their touchtone telephone. If your questions have been answered and you wish to withdraw yourself from the queue, you may enter star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, you may enter star and 1. We have the first question from the line of Shravan Shah from Dolat Capital. Please go ahead.
Thank you. I have a couple of questions. So, starting with the realization growth. So, on QOQ front, if we calculate the number, it is 12.2%. So, just wanted to understand if you can split in terms of the region wise where the actual increase in terms of the realization has happened, and now post June, how much till now in last 1 month we have seen the price decline.
Mr. Choksi, would like to answer that?
Normally, we are not sharing the numbers region-wise, but what we can share in a very broad level is that most of the markets had witnessed price increase. As we all know that the Q1, April to June, is a quarter when we register normally a good growth, though not as good as January, March. And this year we saw a decline, in fact, in the demand in the month of June. So there was some price correction in the month of June. But in April and May, most of the markets that we are operating in saw a good improvement in the price. And of course, one of the drivers of the price rise was that the fact that everyone has been, facing huge cost pressures. So there was an increase, and that was all-round increase. Number one. Number two question you asked about the current quarter is, I think, a very usual phenomena that the monsoons witness price going down, and we have witnessed some price pressures again in most of the markets, but more so in the Gujarat market, which faced a lot of rain, as well as in the northern markets. Chhattisgarh was comparatively not that deeply influenced, but yes, there was minor pressure there as well.
Sir, do you want to quantify broadly how much 5-10 rupees decline which would have happened in last 1 month?
I would not hesitate to say that the price fall would have been in the range of about 10 rupees a bag. And even now, I don't think the prices one can be very sure that they have stabilized. But that's about the type of pressure that we have seen.
Okay. Now coming on the cost front, so there are 3 line items which we have seen a significant increase. So starting with the employee cost, it has increased significantly quarter on quarter from 81 odd crore to 102 crore. So is there any one-off, and this run rate is sustainable?
Employees cost in this quarter is, you are talking of a consolidated basis or?
Yes, consol basis, sir. Whatever my question will be, it will be on consol basis.
I have the figure of 92 crores, that is on a standalone basis. So that is the run rate which will be there in the coming quarter.
Okay. Now coming on the main power and fuel cost. So last time we were expecting that it can inch up by 7 to 8% quarter on quarter. Even if we take the current prices, then the increase would be 200 to 250 rupees. But the actual increase on power and fuel front is much higher. So close to 400 rupees kind of an increase is there. So any specific reason, and is this the peak, or can we see a further increase in the next quarter also?
First, I would like to clarify your earlier question, Shravan, that was regarding the employees' cost. On a standalone basis, overall last year for the full year was about 326 crores, which is on a standalone basis. That translates into about 82 odd crores for each quarter. Considering the normative increase of about 10-12%, the current cost of 92 crores in the standalone is reasonable. And last quarter, if you were to compare, that was only because of aberration that initial provision was higher, and the last quarter, whatever was the cost which was coming to it, that was slightly low. So if you compare with the immediate preceding quarter, you may see there may be some increase out of proportion. But if you see the average for the full year and then see the increase, and then that is a normative increase in the employees' cost. As regards power and fuel, yes, there has been an increase higher than what we had envisaged earlier. And actual cost in this quarter has been, we have booked it in the P&L at about 11,700 as against 9,000. So the increase is quite high. Yeah, you're right. There may be some increase again going forward because the prices are still continuously going up. So we may see further increase in the power and fuel cost in the coming quarter as well.
Okay, but the increase now should be much lesser in the second quarter.
No, it will still be about 20% plus.
Oh. The third question is on the other expenses. So on console basis, so last quarter from last quarter to this quarter, significant 57-58 crore increase. So any specific one-off, or this is also a normal run rate?
Which one? Sorry, again, can you repeat?
Other expenses. So this quarter, other expenses on console was 207 crore versus 149 crore in the last quarter, Q4. So is there any one-off, or this is a normal?
Yeah, you are unfortunately comparing. To see the average here, then some of the volumetric increase. Some of these expenses, other expenses include like stores and spares, etc. That would be linked to the production. So the volumetric increase will also have to be factored in. Plus packing also is there. So if the volumes have gone up by 20-odd%, then that 20-odd% is the normative increase. Other than that is the inflation increase.
Okay. And is there anything in terms of the one-off in other income, because that has also a decline? So this quarter only 7 odd crore versus 15-16 crore run rate.
Yeah, because the funds have started moving for the capex in UCWL.
Okay. So now I'm coming on the.
This is the
returns have started coming down from these.
Okay.
Thank you. Mr. Shah, you'll have to come back in the queue, sir.
Okay, no issues. Thank you.
Thank you. Ladies and gentlemen, to ask a question, you may enter star and 1. We have the next question from the line of Girish Chaudhary from Spark Capital. Please go ahead.
Hi, thanks for the opportunity. My question is to Mr. Arun Kumar Shuklaji. So, firstly, good to be interacting with you for the first time. To start with, if you can just briefly share your vision for the company, what are the 2-3 focus areas for us to take notice of or monitor, and what would be the biggest challenge you foresee?
Yeah, good afternoon, and I'm really happy to be part of this conversation today. And probably I think I would really want to listen this time, all of you, and I'll come back to you with all these queries next time. That is what I would suggest all of you to kind of bear with me. Next time on, I'll take all your queries and I'll reply each and every one of them. Right?
Okay, sure, appreciate. And so my second question is that if I read your FY22 annual report, you shared your 2030 vision where you intend to increase the capacity to 30 million ton, which is like doubling from the current levels after UCWL expansion. So if you can throw some light on this journey in terms of geographical mix, brownfield, greenfield, inorganic, and then also timelines.
It will be basically a combination of the brownfield and greenfield. We have the capabilities of increasing our capacities, as we mentioned. We have been mentioning that in past also on the Concalls at all the three locations. Udaipur, another third line can come in. Siroi can add another line, and Udaipur and Durg also can add another line. Plus, we have got two mines also, one in Nagaur and another in Kutch. So those will be greenfield. A combination of that will lead us closer to that 30 million, which is our vision for the year 30.
But any timelines on when this will get started? Because currently you're working on the UCWL expansion. So
UCWL, we expect it to be in place by 24. So maybe 1 year before that completion, we'll start taking up the brownfield at these places, and then parallelly start the work on the land acquisition and other for the greenfield also. Okay. Some work has already started for the land acquisition.
Okay. And
if I may add to what Mr. Bitka is saying,
yes.
While we have very clear visibility on the Udaipur expansion, as far as the other expansion or the greenfield is concerned, we'll obviously, we have these capabilities as we have been talking earlier, and our capabilities have been enhanced with these 2 or 3 mines that we have got. We have got, in fact, now 2 mine blocks allotted to us in Rajasthan, in Nagaur only, and one is and we have one in Kutch and Gujarat. Besides, we have our own capability for brownfield. So we'll take a decision as and when once the Udaipur gets completed or prior to that, taking into account the demand and supply situation in different areas, and then take a call which one to take first.
Okay. Lastly, on the BCG project, how is it coming along, and what is the scope and how much cost savings has been achieved till date?
I think we answered last time also that the BCG project was already completed, and all the savings that we were to obtain have since been, captured in our results.
Got it. Thank you, sir.
Thank you. We have the next question from the line of Sanjay Nandi from Ratnabali Investments. Please go ahead.
Yeah, good evening, sir. Thank you for the opportunity. Sir, can you please share the volume numbers for this quarter?
In this quarter, we have in JK Lakshmi cement of a sale of 26.91, clinker sale of 0.91, so total is 27.86. Udaipur, we have sales of cement of 5.55. And on a consolidated basis, cement sale is 29.37 after eliminating the inter-unit sale, and 0.95 of clinker, making a total of 30.32 for the quarter on a consolidated basis.
30.32. Okay, and what's the standalone date and consolidated standing in the books as on this quarter?
Sorry?
What's the standalone date, sir?
Standalone debt. Total standalone debt is about 800 crores. 900 crores, 920 odd crores on a standalone, and cash is 900 crores. So the net debt is only 1520 crores. So we'll be a debt-free company on a standalone basis and by the end of this financial year. That is important, which we are debt-free company in the financial year on a standalone basis, on a net debt basis. And on a consolidated basis, we have, as of 30th June, total debt of 1,800 crores and cash of about 1150. So net is 662 crores of net debt on a consolidated.
All right, sir. Thank you, sir. Thank you so much, sir. Sir, I'll be back in the queue, sir.
Thank you. Ladies and gentlemen, before we move to the next question, we would like to remind participants to ask a question. You may enter star and one. We have the next question from the line of Amit Murarka from Axis Capital. Please go ahead.
Yeah, hi, good evening. So the first question is on power and fuel. So what was the fuel mix in this quarter for you?
We have in this quarter fuel mix of about, we did about 46% of coal, 41 of petcoke, and 13 was the other alternate fuel.
46, 41 and 13.
46 coal, 41 petcoke, that is 87, and 13 is other fuel.
Yeah, and what was the power and fuel cost this quarter that you mentioned in rupees per ton?
10,600. Sorry, 11,700. Sorry.
Okay. So did you have some older inventory or something? Because this 11,700 is still actually quite low compared to how things were.
11, not 7,000. 11,700.
Yeah, still 11,700 also. And so, sorry, one more thing on coal. Could you please also tell us what was the domestic coal within that 46%?
Domestic was very less. Whatever FLA we have, that we are not getting FSA. In the eastern region, we are not getting any coal. We have to procure it. So it has to be sold.
Okay. Did you take any e-auction? But because I believe some companies have been taking it.
Not much. Domestic is only 7 to 8%. Otherwise, it's all being imported.
Okay.
Because entire domestic coal is being diverted towards power. Not only the coal is a scarcity commodity in India, but the wagons are also not being available.
Yeah. Right. So so you said next quarter we'll see a 20% rise. But then after that, like, do you see pretty much a peak coming in, or there could be further increases after that also?
Should be peak, but some prices softening has started happening. So hopefully, second quarter we'll see the peak of the power and fuel, and we hope that that decline or softening continues. Unless the trend is reversed, we see that second quarter should be picking out as far as the inventory cost is, power and fuel cost is concerned.
Got it. And what is the stage of the Udaipur plant now? Like equipment ordering, I believe you had done the long lead items, and what's the further progress after the last quarter now?
Anyway, whatever external clearances were required, those are all in place, barring that approval from airport authority. So that is progressing as per schedule, and we hope to see that coming up as per the schedule as of now.
Okay, sure. Thank you. That's all from me.
Thank you.
Thank you. Ladies and gentlemen, to ask a question, you may enter star and one. We have the next question from the line of Mudit Agarwal from Motilal Oswal Financial Services. Please go ahead.
Hello. Good afternoon, sir. Am I audible?
Yeah, good afternoon. Audible. Very much audible.
Sir, I have just one question regarding our supply to the eastern and central UP through Amethi grinding unit. Like, we started supplying the eastern and central UP through the Amethi grinding unit. I just want to understand what kind of arrangement we have with this grinding unit, and what kind of volume growth we can expect from that new grinding unit. I think that should be a grinding unit on a higher or on a tolling charges basis we have. Just want to know your views about it. Thank you.
That unit has a certain state incentives, and therefore the best option that we have is that we sell them clinker and buy cement from them. So currently that is what the system that we have adopted.
Okay. Sir, unclear. If you can throw some more highlights about, is it a higher unit from a existing player or anything different is that? I mean, we have a complete grinding unit available.
Yeah, this is available exclusively to us. Nobody else is grinding from this. This is a new unit which has come, and they have got a state incentive. And if we take that unit on hire, then obviously there would have to be a transfer of the assets, which can jeopardize the incentive that unit is getting. So the best option that we have is to sell clinker to them and buy cement from them. That was your first question as to what is the modality that we have adopted. Regarding the volume, it has a capacity of nearly 1 million tons a year. And depending on the clinker that we are able to spare, we expect that in the first year, we should be in the first 12 months of the operation, we should be able to get about 6 lakh tons cement from them.
Okay. That's really helpful, sir. Just one last thing. For what period this grinding unit is available to us?
We have the first right of refusal as far as this unit is concerned. We have a 10-year agreement with them currently, and thereafter this can be renewed at our choice.
Okay. Thank you so much, sir. That's it from my side.
Thank you. Ladies and gentlemen, to ask a question, you may enter star and 1. We have the next question from the line of Prateek Kumar from Jefferies. Please go ahead.
Yeah, good evening, sir. My first question is on QCW capex. Out of 1650 crore capex, how much is spent till now? And also
350 crores.
350 crores. Okay.
Yeah.
And as you have indicated earlier, the timeline for this is in phases in 2Q and 4Q of 24. Is that right?
Yeah.
So clinker is expected by 2Q, and which is like sort of 12 months from now. And so, I mean, have we started the construction work there? Because
it has started.
Okay. Secondly, for your long-term expansion plans which you mentioned earlier in the call, do you foresee any limestone renewal or mine renewal issues post 2030 for some of your mines?
We have only 3 mines which is coming up for renewal in that period. Other than that, there is no issues on that.
You see that there are more than 20-25 companies who will be facing this issue to start with 2030. And we are very sure and hopeful that by that time, better systems will be adopted by the government itself in terms of notification of amendment in the Act. Thereby, the existing lease operators or the manufacturers themselves will probably have the first right. So while they may do a bidding purely from the point of view of ascertaining the rates, etc., but I do not think that any mine or any cement company plant would be threatened for non-renewal of the mining lease. That's our thinking, and that is what we have earlier discussed with the central government on this point.
But just that in your case, maybe the impact may be higher. So maybe we can also see significant cost escalation on RM cost or return ratios after that, or we don't foresee that.
As of now, I don't foresee any significant change on this account.
Sure. And so just one question on your demand trends. How have demand sort of faring in the month of July?
Well, the demand, I would say it will still register a growth over the corresponding quarter or the month. So the demand per se continues to be fairly good. Not too many applications on that sphere. These are usual rainy season, and demand usually gets affected in this quarter. So there's nothing new, but still we are seeing a definite pattern of growth over the last year. So I mean, I would compare with the previous quarter or the quarter prior to that, but definitely compared to the corresponding quarter, we will see a growth.
Thank you, sir. These are my questions.
Thank you. We have the next question from the line of Uttam Kumar Shrimal from Axis Securities Limited. Please go ahead.
Yeah. Thank you, sir, for giving the opportunity. Sir, with regard to, sir, this other expenses, this 181 crore that we have reported this quarter, is this sustainable going forward also?
Yeah, it is. As I mentioned, a part of that is linked to the volume. So it will move in tandem with the volume growth.
Okay. And sir, how has been our sale of value-added product during this quarter?
Sorry?
Value-added product like RMC and all other blocks and all that?
118 crores in this quarter.
How much, sir?
118 crores.
118 crores. And sir, couple of data points like trade mix for this quarter and blended cement mix this quarter.
Blended, we did about 67% in this quarter. And trade was about 56.
56. Okay. Yeah. And what was the percentage of premium cement during this quarter, sir?
Premium cement we are selling only in the north. It is about 14%.
14.
Yeah.
Okay. So last quarter it was around 25%. So it has gone down this quarter.
That was of the trade sales. So now we are talking of the total sales.
Okay. Okay. Yeah. Okay, sir. That's all from my side. And thank you.
Thank you.
Thank you. We have the next question from the line of Ritesh Shah from Investec. Please go ahead.
Hi, sir. Thanks for the opportunity. So just one question. Just wanted to understand, is there anything different on the marketing side that we have done over the last 3 to 4 quarters? And is it reaping us any benefits on back of that? Thank you so much.
Mr. Shah?
Would you like to respond to that?
Hello. Can you please repeat the question? I'm sorry.
Yes. Choksi sir, first, congratulations for your excellent tenure at JK Lakshmi. Sir, my question was, are there any specific marketing efforts or new initiatives that the company has taken in last 3 to 4 quarters? And if yes, are we getting any benefits out of it so far, or how should we look at this particular variable? Thank you.
I think one of the areas that we have focused is on the geomix. So trying to curtail our the distances that we are going. So we are definitely increasing our sale in the nearby markets. And all these, and the second effort that we have been working is on enhancing our network and the addition of the dealers, so that we are able to build a cadre of dealers who are the main takers for the trade category of cement, and thereby increase our trade segment. So that is the effort that we've been doing. We have been continuously getting results, good results on that. Besides that, we are also trying to focus more and more on our premium products. So all these 3 efforts are slow moving but gradual moving, and in due course you'll see the full import or the full benefits out of these efforts.
Sure, sir. This is very helpful. Sir, just a related question. Sir, how should we understand the number of brands that we have in the marketplace? We have multiple brands, which is a reflection of OPC, blended cement, and basically value-added products. Do we think that we need to rationalize the number of brands which are there in the marketplace? Just some flavor over here would be quite useful.
You see, we have a brand integration strategy in place, and we are working on that. But the attempt is that in one market, number one, all these markets are catering to individual niche consumers. So they are not actually in competing or in the same market space. Secondly, we have certain preference for our Udaipur, which is from where we supply mainly the platinum brands. either Platinum Heavy Duty or Platinum Supremo, because of the different characteristic of that cement. We have a certain consumers who prefer only the Platinum brand. So with a view, we would definitely like to retain these consumers from where we are able to get better pricing as well. And therefore, all these brands are very well working in harmony with each other.
Sure, sir. So just another question. How should we look at group simplification going forward, given we have JK Lakshmi and UCW? Are there any timelines over here that one can look at?
Sorry, can you repeat your question?
Because the question is, when should we look at group simplification, or should we assume that JK Lakshmi and UCW will continue to trade as two separate entities? Is there any roadmap from this particular angle?
Yeah, we have been talking this in the past also on the Concalls. The reason as to why we are keeping the two entities separately as a listed entity is on account of the differential tax rate. While JK Lakshmi continues to be taxed at the old regime of 35%, UCWL has opted for the lower tax regime. And the reason for that, for JK Lakshmi to continue, is to avail this MAT credit entitlement of about 250 odd crores, which is sitting in their tax books. So in case we switch over, then we lose that tax benefit MAT advantage. So that's the reason as to why we continue to have separate entity. Moment we exhaust this MAT credit entitlement, which will be maybe 2 to 3 years time, depending on the actual profitability in these 3 years, then JK Lakshmi can also graduate to 25%, and that will be the opportunate time for us to collapse the structure and merge the two entities.
Sure, sir. Thank you so much for the answers. Thank you.
Thank you.
Thank you. Ladies and gentlemen, before we move to the next question, this is a final reminder for questions. To ask a question, you may enter star and 1. We have the next question from the line of Kamlesh Bagmar from Prabhudas Lilladher. Please go ahead.
Yes, sir. So my one question was on the part of your realizations. So if I net out the non-cement revenues, then your realizations are up 16% quarter-over-quarter, which is 700 rupees per ton, and gross of taxes it would be 49 rupees. So in none of the market we have seen such a sharp increase in the prices, and that also on the average basis, not on the exit or in between. So what's the reason for that? Is it because of the, like say, we have changed from X factory to FOR, or what has been the reason for that? And such an improvement has not fallen into the margins. So margins have been like say flattish or down or quarter-over-quarter, though last quarter has been abnormal because of those cost items, but even on year-over-year basis.
Kamlesh, you were there in the since the beginning of the call. I had made this opening remark that this change has happened in the way we are accounting for the cement being procured by UCWL for conversion from their clinker. Earlier, what was happening is that the entire clinker which UCWL used to sell to JK Lakshmi was being shown as sales, and the converted cement was being shown as sales by JK Lakshmi. So it was resulting in double accounting for clinker as well as cement. Now, from this current quarter, what we have done is that they will not show that as clinker sale. Only clinker will get converted at JK Lakshmi. So as a result, what has happened, the volumes have come down significantly in this quarter for the clinker supplied by them, against which no sale has been booked in JK Lakshmi. Only the conversion charges were paid by UCWL. So that's the reason as to why, with the lower quantity in this quarter, the sales realization appears to be on a higher side. Equally, if you were to analyze the expenditure part, that was also gone up correspondingly. As a result, the profitability remains the same. But when you are comparing on sequentially from fourth quarter to this, that is the change that has happened. Suddenly the realization shows improvement, suddenly the expenditure shows improvement because of the lower volume in this quarter on account of this the different bases on which we are doing. If you were to see on a consolidated basis, then there will not be any such abnormalities noticed. So kindly see it on a consolidated basis. There will not be any such substantial increase either in the cost or in the realization. Those will be then whatever are the normative increases in the cost and the realization in the market.
But even on the console basis, like say we are seeing 600 rupees order per ton improvement in realization quarter-over-quarter, which is 12%. So honestly, like say on the realization part, it's really not summing up.
Console basis, there is a normative increase which has happened from last year. The average was about 4,900. Now it is about 5,400. So that is a normative increase which has happened in the realization. And as regards the cost, there is an increase from 4,300 last year to 4,900, part of which is volume linked and others is the normative increase.
Okay, thank you, sir.
Thank you.
Ladies and gentlemen, we will now take the final question from the line of Shravan Shah from Dolat Capital. Please go ahead.
Thank you. Sir, couple of things. Sir, you mentioned the non-cement revenue is 118 crores. So out of that, RMC revenue was how much?
RMC was about 55 crores.
55 crores. And the other clarification needed is you said the blending ratio in this quarter was 67%. Last time I think you mentioned 55%. If so, despite a significant increase in blending ratio from 55% to 67% QOQ, our trade mix has remained the same 56%, which was the last quarter.
In the fourth quarter, our blending was 65, not 55, 65. 65, it has gone up to 67.
Okay. And here, last time also we mentioned that we want to increase our trade share and the blending ratio 4 to 5% in FY23. But in this quarter, nothing has happened. So do we think that we can still able to increase this trade share by 4 to 5% for the full year FY23?
Yeah, that is what our target is. It doesn't happen overnight. It doesn't happen in one quarter. Gradually it will happen. Our desire is to move towards that. And we are hopeful that it will happen.
Okay. And sir, the lead distance for this quarter was how much?
Lead distance for this quarter. Just a second. 390 or 393.
393. Okay. And just to again clarify, the UCW expansion, you said that the 1.5 MTPA clinker will start in next September, because last time we said by December. So
but I said third quarter. Third quarter is December. You're right.
Okay. Third quarter. And the capex for the full year on console, what we mentioned last time, 700 crore and 900 crore for 23-24, the number remains same, or is there any change?
Total capex for that project is about 1650 crores. And
yeah.
We have done 350 crores so far. So balance will get spread over the next 2 years.
Okay. And in terms of the broadly, last time we said the volume we were expecting 7 to 8% for full year, and in terms of the profitability 1,000 rupees per ton. So any change in stand there?
It will all be dependent on the demand and also the way the coal prices, petcoke and coal prices behave for the remaining period of the year. So our endeavor is to reach that figure of 1,000 rupees per ton.
Okay. And last, again, sir, just wanted to clarify, actually, even I asked and the previous participant also asked, on console basis, you mentioned the increase in the realization should be normalized, but still there is a 12.2% increase. So if you, that's what the everybody wants to understand what actually has happened, why such a significant increase. So something more clarity would be helpful.
Yeah, that is the reason as to why I mentioned, because of this change in the way we are accounting for the converted cement which we are doing CWL. While in the previous quarter there was this which was being booked both as clinker as well as on the cement basis. In this quarter, it is only net of that.
But sir, on console basis also it should get nullified. So still on console basis, our realization has increased 12.2% QOQ.
Yeah, that is there. That is a normative. That is, it has increased on a consolidated basis. You are right, because those factors get eliminated on consolidated basis. So on that basis, it is increased by 12%. You are right.
Okay. That's it from my side. Thank you and all the best.
Thank you.
Thank you. Ladies and gentlemen, that was the last question for today. I now hand the conference over to Mr. Vaibhav Agarwal for closing comments. Please go ahead, sir.
Yeah, thank you. On behalf of Phillip Capital India Private Limited, I would like to thank the management JK Lakshmi Cement for the call, and many thanks to the party for joining the call. Thank you very much, sir. Melissa, I'm going to conclude the call. Thank you.
Thank you, Mr. Vaibhav. Thank you, all the participants.
Thank you, members of the management.
Most welcome,
and Mr. Agarwal. Ladies and gentlemen, on behalf of Phillip Capital India Private Limited, that concludes this conference call. Thank you for joining us, and you may now disconnect your lines. Thank you.